Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.Exchange. US markets hit a fresh all-time high. Now the futures are slightly lower, but yesterday night it was all-time high. So world markets, they are talking about all-time high. We are talking about 6 months low, 4 months low, and those kind of things. Our market, still not out of the problems because, FIs are still selling. As of yesterday, they've sold for 60,000 crores. Every day, FI selling is there. The next day market gap down, or even if the market gap up due to global cues, intraday selling happens. There's some good news, market recovers, but the next day it is being sold off. So this game has been continuing for the past, how many months? Since October. So the picture not looking really very good. But yesterday there are some signs of positive things. Number one, HDFC Bank, the index number one, the highest weightage. So the HDFC Bank started going higher after the results. Reliance also, number two stock, also went up after the results. But after a few days, the Reliance has wiped out the entire gain after the results. So we need to see maybe after a few days, when the short covering is over, whether this gain is being wiped out or not. But as of yesterday, it was a positive sign. Even HDFC Bank ADR is also higher by about 3%. Right? So there is still some steam left in HDFC Bank. If the market recovers, HDFC Bank will be the first one to recover, because even as of yesterday, HDFC Bank is down nearly 7-8% for the last 1 month. Right? So in the first week of January, some business update came. So the markets were not happy with their business updates. So from there, HDFC Bank has fallen about 10%. Right? So that is one thing. Second thing, yesterday, for the first time, the India VIX came down slightly. But I told you earlier, there will be one day, at least VIX will have to crash by 5 to 10%. So that is when you can assume that the worst is over. But though India VIX was lower, but it was not lower significantly. But I don't think that can happen, because a budget is a very big event coming in front of us. So ahead of the budget, I don't think the VIX will collapse. So probably after the budget, the VIX may collapse. So that is when you can be sure about that trend. Third, today we need to see how this Hindustan Unilever is going to perform. Yesterday, the FMCG index was slightly positive, because most of the FMCG stocks have fallen already. Look at Britannia has fallen 30%. Look at Hindustan Unilever, fallen 20-25%, right? So most of the, FMCG stocks are beaten down severely, so expecting a bad result. So therefore, no bad result is already a good result, or no bad news is already a good news. So because of that, we need to see today how Hindustan Unilever performs. Accordingly, other major FMCG stocks like ITC, Britannia, and those stocks will be following Hindustan Unilever. So if HDFC Bank recovers some more, if Hindustan Unilever and other FMCG stocks do well today, so there is a possibility market might close positive. So today, if the market closes positive, then for 2 consecutive days, positive closing will be considered as a bullish sign. But as of now, that looks doubtful because, GIFT Nifty is already indicating about 60-point gap down only, right? So whether this gap down happens, sometimes, we may not follow the GIFT Nifty. So because like GIFT Nifty, trades purely based on the global cues. So we need to see where we are going to open. But on the lower side, it's very, very important that yesterday's low should not be broken. Yesterday's low and day before yesterday's low, both are very close to each other. So downside, so upside, I think 23,300. So I think 23,300 is going to be a stiff resistance because, today is a weekly expiry. So I'm talking about today only. So today, overall, Nifty is expected to trade between 23,000 and 23,300. But markets going to be very volatile, and keep watching the India VIX. So if the India VIX continue to fall, then there can be some kind of a stability. So otherwise, have your hedges in your place. So what I did yesterday, I bought some 23,000 put option, so in case market goes down, I can make some profit. But I financed it by selling 23,700 put option. So what they call it as, 1:2 call ratio. I bought one put option at 23,000, sold two put option 22,700. So now because if the market suddenly falls, I do not have to worry, but I will have to worry if the market falls below 23,700. No, I'm sorry, that is not for today expiry, that is for monthly expiry. Right? So because I still hope even this 23,000, the recent low is broken, the next major support will be 22,800. So with that view, I've taken that position. Of course, that is for hedging purpose I've done. So let us see what is going to happen today. Hope you enjoyed watching this video. Thank you for watching.